Hi, welcome to week 7 of your Ag Science 305 class. Now, in this week, what we're doing is we're going to take content from last week. So you may want to go take a look at last week. And we're going to take that content, which are terms like what is a current asset, what is a non-current asset, what is a liability, current or non-current, what is contributed capital, what is retained earnings, which those make up equity. So last week we had terms or concepts about financial records in an SAE project. Really, they are financial records in any agribusiness. So we're talking about things that the rest of the world of agriculture uses all the time. What we want to do is bring those into the world of the SAE, because when it comes to documenting experiences, that's what the idea of records is all about. So what we did last week, again, is we learned about terms, and hopefully you connected those terms to an SAE. Easiest one is entrepreneurship. This week, what we're going to do is take the idea of an SAE and fully integrate it into the concept of records. So when we do records, what we're doing is we are connecting the financial transactions, maybe the journal of time, but financial transactions to the SAE activity. So for example, if I go to the feed store and I purchase feed, that is an expense for what project? And you have to buy it for a project. You can't just buy feed for the heck of it. So the idea is that when we have an SAE project, if we have financial records, we need to document those, and that's the idea of record keeping. So what we're going to do in this week is we're going to connect in to the types of SAEs and a few details of records that would relate to that kind of project. Next, I want you to actually do records, but not using the AET record book like we're going to eventually do. I want you to look at records one transaction at a time. In other words, when you go and buy feed, how does that work from a record keeping standpoint? So what we're going to do is, originally before AET, most people kept records on a piece of paper in a notebook. But when they did that, they had to somehow bring that information out and show growth. Like, how did I do this year? Here's all my records. I put them in my record book. So how did I do? So that was kind of a big manual process to go back and look at how you entered it in your book. Did you do that right? Well, if you put it here, it needs to also go here. That's the idea of double entry accounting. As you keep records, you're offsetting the entries every time. For example, if I go and buy feed at the feed store for $300, that takes $300 out of my bank account. That means my bank account goes down by $300. My expenses match where that money went. So it's the idea of balancing. Debits and credits are really the way accountants look at that. You need to have a credit for every debit that's entered in your books. Now, debits sometimes mean the account goes up, sometimes it means it goes down. So there's this idea of up and down now with the money as well. So hopefully what I can do in this week is show you how common SAE records are entered into what's called a trial balance. That's kind of a balance sheet and an income statement put together. So I've already built it for you. So your homework assignment is to take common SAE records and put them into the Excel-based record book, kind of another way records were done, not always by hand on Excel spreadsheets, but I've created one for you. So you're going to use that to fill out your homework. Then what you're going to do is save that homework and answer one question and submit it back to eCampus. All right, so let's take a look at your week and some of the details. So hopefully I can help you with this week's assignment. Let's take a look. All right, when you get into eCampus, you're going to see your content area here. There's going to be 3 basically PowerPoints that I've got done for you. Each of these actually kind of gives you the details of the SAE records that would have to do with this particular type. So I've got money for research, money for placement, and money for entrepreneurship. All right, let's open up a few of these. I'm going to start off with the research one. That's the easiest. So when you get to your research one, you'll see it's got some front-end stuff about what a research SAE is, how you do a plan, but really it's this one right here, documenting your experience in your record book. So if you're a research student, the first thing you're going to start off with is research funding. Research funding is a source of income, and that could be from your parents or from somebody else. So when you'll document that research income, then you'll document the expenses that go along with that. Well, what are some common expenses? So supplies, equipment rental, veterinarian feed, those are the expenses that you got the income for. You also could have non-current items. So these are going to be things like laptops or microscopes. These are things that are used in your research project Again, it defines typically expensive and involved depreciation, which allocates this cost across several years. So then you reflect on your project. Now the next one is placement. Well, placement is even easier. Again, you're going to get ready for the placement project by planning, but documenting your experience is the focus, and that's going to pretty much be a paycheck. So the paycheck's going to be gross wages, expenses that relate to your paycheck, hours, and maybe a description of your work. So the idea is with a paycheck's pretty simple. All right, the last one, entrepreneurship. Entrepreneurship is, again, going to start off with a plan, but it's going to go right to the finances. And so here are the focus. This is the idea that you could have beginning inventory. So this means that you began the year with something. What's that look like? Then you're going to have expenses. Notice you don't start off with income like research. You actually start off with expenses. Then you're going to have income. So finally you get to sell things. Then you may buy non-cash, or you may have non-cash transactions, which means you didn't actually pay for the feed. You swapped your labor for it, or you traded hay from your own project to feed your own livestock. And then finally buying and selling non-current items. Now, I'm going to go through then each one of these, and so I'm going to go through some examples. What does it look like with beginning values? What's that all about? So we're going to go through that. Then we're going to go through to document expenses. And so what are some example expenses that you would have? Even different example projects I go through with expenses that relate to those. And expenses connects to the value of current inventory for an SAE. So how does my expenses relate to that inventory value? Finally, income is the other thing I'll go through, some examples of income. Then the idea of non-cash records. Again, I'll go through examples for you. And then finally, non-current items, which are going to be, again, examples. So the idea is in this week, you are going to be learning about the different types of records that connect to each SAE. So hopefully you'll see that. Now, to help you with this, I would like you to do the records in what I would call a manual fashion, like very old school. So here's the assignment. I have given you in your eCampus an Excel file. So you will pull that Excel file up and you will do the work that makes it be your assignment. You will print this Excel file out, preferably just in a PDF document, and then you will submit that to eCampus. I've already got it formatted to print to one page, so you ought to get that done pretty easy. All right, so the first part of the assignment is fill out each row with the debit and the credit entry. In other words, in the cash on hand assets, or in the expenses, or the income and back in the cash, or liabilities, whichever relates to the entry. You'll be able to enter those records, and you'll need to do it in a way where the balance sheet balances. So I've built a spreadsheet for you. I've got it all organized by type of asset or liability or equity or income or expense, and I've got the sheet to look to balance. I've also given you some tips about where to put things, so I'm going to show you that in a second. Also in this spreadsheet, once you get done, we want to talk about the results. So did this SAE set of entries show growth or show losses? And if it showed growth, how? If it showed losses, how? And so you'll be able to write in your own words how the results were created. And so I'm going to show you that now. All right, when you download this Excel file and pull it up, here's what you will get. You will get a set of SAE records over here on the left-hand side. Now, on the right-hand side, up to the right of that, you will have a little trial balance built. Now, a trial balance is not a term you've seen before. A trial balance is a balance sheet that's set up to be assets, liabilities, and equity, like I've done, and added to it is an income statement. So really, the idea is that you put your records into these columns, and that really covers all of the potential entries that your record book would have. And if you do this right, line by line, which I'll show you an example, then your balance sheet will say, does it balance? And if it says okay, then the answer is yes. Now once you're done, or every time you make an entry, these results are here. So it's going to try to measure what's called growth. So growth is going to be from either income or equity. and then you'll put all your entries in and you'll see the answers here. Now, when you get done, it's going to give you a growth, positive or negative. I would like you to describe right next to it your words of how this student was able to grow financially from these records. All right, let's go take a look at the examples. Now, I've already done this first one for you. Let me get rid of those. So here's the first one. Your sheet's going to look just like this. It's blank. So the first one says before ag class. So back on the presentation slides, that talked about stuff that happens before ag started. So in this case, the example is I began with $1,500 in cash to start my projects. So that means as an asset, a current asset, which I have a box for, that means I must have $1,500 in the bank. Now, if I slide down, is my balance sheet balanced? The answer is no, it's off by $1,500. So I go up and say, all right, well, I can't just say I have the money. I have to say where it came from. Well, it wasn't a loan. Was it equity? Well, I started with it before school started. Was it retained earnings, which is profit? No. Contributed capital? Oh, yeah, that's what it is. So $1,500 goes there. Now, once I put that in, now I have a debit and a credit and everything balances. However, when it comes to growth, there still is no growth. So what you're going to do is you're going to do each of these lines. And as you enter each of these in the appropriate boxes, you will be able to see if your balance sheet balances. And you'll be doing records what I'd call the old way. Now, the idea is here, some things are going to be negative and some things are going to be positive because debits and credits keep track of going up and going down. We don't really need to get into that a whole lot, but the idea is that every asset you have is a debit. Every liability you have is a credit, and every equity you have is also a credit. So these should all equal. However, we have income and expenses. That's what creates profit. So that's where that credit value comes from. So the idea is every time you put in an entry, it needs to be either going up based on debit or credit or going down. In this first case, for example, cash on hand, 0 is 0. 1,500 is more than 0, so that's a positive. However, it balances right to equity, which is also 1,500, so that shows how that balances. If I jump down to an example, if I purchase feed for my new show hog using cash, well then as an asset, my cash does not go up by 300, it goes down by 300. So that's where you have to use the negative. From a debit and credit perspective, remember assets are always debits, so that means I actually have a credit to my cash, which that's what caused it to go down by $300. Now, of course, I have an offset to that, meaning that I have $300 worth of expense, which is not a negative, but $300 to show that. However, it does show that I have a loss of $300 right now in my SAE project. So the entries that you make here, and if I go down to the bottom, I'll see that I still balance. So I've built this formula down here to help you keep up when you balance and when you don't. If you do not balance, then you need to go up here and see what potentially is wrong. Now, the idea that I've built also for you is not only does the bottom check you, but I have built a equity section here that brings returned earnings in from whatever the income and expenses are. So these have formulas in them that are already written. Do not change those formulas. They'll help you. If you do change them, then you're going to end up not balancing. So anyway, hopefully this top part will help you. Now, once you get done, you will see a growth measure here at the bottom. And then the question for you is looking back up at these entries, how did that growth happen? And in your own words, I'd like you to write right here in your spreadsheet the answer to that. And that way I'll be able to take a look at that individually and grade each of you. You may want to take your cells and merge them here like I've done in your sheet so that you can actually write in a paragraph form. But either way, get down and hear why there was growth or not growth. All right. Like always, make sure that you ask me some questions, not on Sunday night at midnight, but actually a lot before. So take a look at the resources on this page and also the assignment and work through that. Hopefully it'll make sense to you. And it's a great example of how you really will keep records hand by hand, entry by entry. It also shows us that the complex records of most SAE projects today can't be done like this. That's the purpose of why we have an AET record book, to try to make those entries more digestible and have better financial information to make decisions, which is the reason why we really keep records. Okay, thanks again for taking a look at this video, and good luck in your assignment.